This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome, and you are listening to your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is June 8th, 2020. This is show number 50. And Nick, last week we got these amazing job numbers, confounded all the so-called experts, and we got many comments on the channel and to my email box saying basically these numbers are cooked. You can't believe anything they say. And what do you make of it?
Well, personally, I don't know if they're cooked or they're not cooked. I've never known that. And I don't even, we talked a little bit last week about how they even go about figuring out what the numbers are. But the reality of it is, to me, it doesn't really matter. I don't care if they're cooked or they're not cooked. The bottom line is the reaction of the market is all that matters. And I try to get that across to traders all the time. So, a lot of times people will come to me and they'll say, hey, Apple guided down. They said they're going to have problems in China and the stock goes up. And I said, well, who really cares about what they said? You just have to follow the price action. That's really all that matters. And vice versa. If, say, Apple said something great, and they said numbers are going to be great going forward, and the stock sells off 10 points or 15 points. The market is the final arbiter. The market is the final decider. Has nothing to do with the news event. So I had no idea there were going to be a blowout report of the job report. I actually went ahead and told my membership base the night before, expecting the job report to be a non-event, but the trend is up, so we should ultimately go higher. So that's exactly what I said verbatim. And, I have no idea what the job report's going to come out and be or how the market's going to react to it. Sometimes the market doesn't react at all. Sometimes it's a non-event. Sometimes the market goes bonkers like they did on Friday. So, again, that's why we want to follow the trend. We want to follow the chart pattern that suggests whether the markets can go higher or lower. And that's what I've been doing really since the March lows.
Right. And so when we look at it, though, my personal opinion is maybe numbers weren't as good as they came out, but clearly we know from the week before continuing claims were down, even though we had a couple million new claims for unemployment insurance. So the trend is certainly down.
Yeah, and don't forget, you have the ADP job report, which comes out the Wednesday before the Bureau of Labor Statistics report. That's the report that we got on Friday by the government. So I always said, and I said this last Wednesday as well, follow the ADP job report. It's a much cleaner report, because ADP, these guys actually print checks for people. They know what's going in and what's coming out. So, these guys have a better insight on it. I think there's probably a lot less fudging going on there. They have really no reason to fudge the numbers. So the bottom line is the ADP job report was a lot better than expected, and that happened. So, can the job report be somewhat skewed? I never believe I never believe anything government tells me, first of all. So let's just clear the air there. But who cares? The bottom line is the market reacts, and you're either going to be on the right side or the wrong side of that reaction, and that's really all it comes down to.
Right. And along those lines, I was watching an interview, and if you haven't seen it, I'll throw the link up in the show notes to the interview. It was an interview with Mark Dice and Peter Schiff. And Peter Schiff basically is, he called the crash, the real estate crash in 2007. And pretty much he's been wrong ever since then. And now he's calling for really dire results. Again, he's not making any time frame predictions. But what do you say to Peter Schiff?
Listen, I've listened to Peter Schiff over the years. He has a lot of valid points, but he's not a trader, right? So he's a gold bug, and he has a lot of valid points that eventually will come home to roost. But as a trader, we always have to rely on our timing, and we have to anticipate what's going to happen in the markets before it actually happens. So, Again, that's why I use pattern, because I don't know the whole story. I'm not smart enough to figure all of that out. And I don't really know anybody that is, unless they're a true insider, and I'm not. So what I do is I just look at the chart pattern, I go off of it, and then I just go about my business. I'm not saying, I don't say anything terrible, bad or negative about Peter Schiff. I actually like what he has to say, because he's actually telling you a lot of the things that are going on. He just doesn't have a timing aspect around what he's doing. And that's, what makes it tough for people that want to trade. But if you're an investor, or, you're somebody that is longer term and you want that longer term outlook, that might help you. But reality in this market, I just want to trade. Like I say every time I'm on this program, if the Dow goes to 1,000,000, that's great. I want to be part of that move up. If the Dow goes down to $1, that's great. I want to be part of that move down. So I have no bias if it goes up or down. I keep myself as neutral as I can and grounded as I can. And, a trader just wants to be on the right side of the trade.
Yes. And obviously Schiff missed the whole Trump bump, the Trump bull market, if you will, right? He totally was off on that. So he missed 3 years of potentially profitable trading.
Yeah, I don't follow what anybody does, because I don't want it to skew my own thoughts. So I really don't try. I try not to listen to anybody. I don't even watch CNBC anymore. So in the background, I'll have, some sports on, but now there's no sports. So I'll put on a little bit of music or something like that. But the reality of it is, I don't want to even hear anybody's opinion. I just want to look at the charts and go about my business without any kind of bias.
Yeah, so I think that's a good point. Ignore the opinions, watch the charts, and really govern your investing decisions accordingly.
That's what you have to do in this business. Just think about it, Kerry. A couple weeks ago when we had options expiration, we were getting slammed with as dire news as you could get. My newswire was blowing up. Stan Druckenmiller said the worst market ever, the most overvalued. David Tepper, Boeing CEO said, this company's going to fail. Warren Buffett sold out of his airlines. I could keep going on. There was so many negative headlines. And what did I say? The charts are not telling me to get out of this market or get short. Charts are saying stay the course and the markets are going to go higher. And, that's ultimately what happened. This is not an easy profession. Sometimes people come in this business and, they think this is easy. There'll be a time when I do turn bearish, but it's just not yet.
Yeah, so the charts were right and the experts were wrong, and we can put experts in quotes. So where the market is now, what are you watching?
Well, we had a really good rally on Friday. It was very broad-based. Money continues to come out of the NASDAQ. In fact, the NASDAQ 100 is actually negative today, which is something that I've talked about on this show 3 weeks ago. I said, watch, be careful. NASDAQ's running into lots of resistance, a lot of money coming out of there, but it's going into other places. And when that happens, it's a real positive. Look at JP Morgan. Whether you love the bank stocks or you don't, the stock has gone from basically underneath $85 to north of 112. And that's broad based. That's when you see financials go up, that's a positive for markets. So another indicator too I look at is the Russell 2000. Today, that's up 1.5%. Meanwhile, you have the NASDAQ flat on the day and the S&P 500 is up about 0.3%. The Russell represents small cap companies in the United States. That's very strong right now. So you want to respect these different, these different indexes or these different equities that are higher or lower. They tell you a lot about what's going on in the market. And every night, when we get the closing prices, I go to work for about 2-3 hours and I do calculations on everything. So, I have a good idea of where things want to go. And ultimately, I look at the patterns of 500 stocks a night. So, that's the kind of work you got to put into this kind of environment. If you don't do that, you're really not looking to succeed.
All right. So you closed out BP today?
I did. I closed out my BP call options today. We got a nice pop right at the shortly after the open. And again, I had a $30 strike price. I made 22.5%. And that's a very, very nice gain to start the week.
Yeah. And you only held them for like 3 weeks or so.
So I had that one a little longer. I first got into that in April, so I've been in that for a while. But the pattern was good, and like I said, it should get us towards that $30 level, and then I'm going to take my money off the table. But just being that we had the big run up on Friday, the big run up, nice gap up today, I'll take those profits, and I'll watch pattern again. And I'll maybe look to re-enter it.
All right. Anything you're looking at now? Anything?
Yeah, there are a lot of different things that I am watching at the moment. But when you have that big rally like we had on Friday afternoon, where you're up 800 points in the Dow and everything is soaring and roaring, I got to wait for a little bit more of a pullback, a little bit more of a pattern. But there are definitely some areas, this basically the same areas that we've been talking about, are the same areas that I still like. So I'll just continue to watch them, and we'll let the charts give us a setup.
All right. So gold and silver, they're up a little bit today.
Yeah. So we got a little uptick there in gold today, up $16. And really, when you look at gold futures, or you look at, the GLD even, which everybody can chart that, you're just seeing gold go sideways. And like I said last week, we want to see more of it. And when we do get that pattern formation that really tells us what's going to happen, gold should break out to new highs. But right now, it's consolidating, and that's healthy. That's what you want to see if you want to look for higher price in gold.
All right, so consolidation before new highs then, huh?
Absolutely, and that's what needs to happen. That's what healthy markets do. And I'm not saying, there's not central bank printing to the moon, because there is. But what I am saying is the charts, when we talk about the charts, they need to consolidate. If anything goes up in a straight line, the run is over. If things go up and they pull back, they go up a little bit, they pull back, and the trajectory is, just a little bit from the lower left to the upper right, and you got a nice little slope there, that's what you want to see. That's a healthy market.
All right. So we can kind of just sit back and wait. You got anything you want to share with us about any of your members, things that they did last week that kind of stuck in your mind?
Well, one thing, I hold a class on Thursday night. It's not really a class. It's a Q&A, and I let the members come in and ask me questions about all of my trades, about why we got in them. And I also go over trades that they want to do. So a lot of times I'll give them my trades. I'll also give them the direction of the S&P 500 and the other indexes. And a lot of times they may want to do their own trade. So they come to me and they'll say, hey, Nick, what do you think about XYZ stock? Well, one thing I noticed last week was almost overwhelmingly, out of all the people that attended that class that night, they wanted to short. And I said, do you guys hear what you're saying? Everybody's looking to short. What is there out here telling you need to be short? And, and then they all turned around and said, well, you know what? Yeah, I don't know. I'm like, why do you want to short? Just because the market's up so much? And that was the reason. And you could see the market continued to go higher. So again, know your trend, get educated, and know what the charts are telling you.
Yeah, so just because the market's going up doesn't mean it should be shorted.
No, but that's what happens to a lot of people when they listen to the talking heads. Just use the charts, listen to the charts, let the charts whisper in your ear. Don't let people just come out and say things, and persuade you, because it's not based on mathematical or formations that are out on the charts. You want to use mathematical principles, and you want to use the formations that are out on the charts.
Yeah, could not agree more, because I've been following you for a long time, and your record really speaks for itself. But the record's up there on inthemoneystocks.com. Make sure you go take a look at it. Watch the Twitter feeds throughout the day. That's at ITMS, at Nick Santiago, and of course ours at Kerry Lutz. And any questions or comments for Nick, we love to hear from you. KL@KerryLutz.com. Nick, we'll pick up tomorrow.
Sounds good, Kerry.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.